What if I told you your money could hit your bank account every single week, not once a quarter, not once a month, every single week like clockwork? No second job, no side hustle, just 12 carefully picked dividend stocks working behind the scenes while you sleep. The average American household is spending over $6,500 a month on expenses. That's about $1,600 a week walking out the door on housing, groceries, gas, and everything else life throws at you. Your bills show up every single week without fail. So why should your investment income only show up once every 3 months? This is the weekly dividend cash flow system. And by the end of this video, you'll know exactly which 12 stocks to buy, how to stack them together, and how to structure your portfolio so you never go a full 7 days without a dividend payment hitting your account. Now here's the thing most people get completely wrong about dividend investing. They buy random stocks. They wait 3 months for a tiny payout. Then they complain that dividends are too slow to make a real difference. That's not a dividend problem. That's a structure problem. Most dividend-paying companies follow extremely reliable payout schedules. They declare and distribute dividends during the same week every quarter, some even on the exact same calendar day year after year. Smart investors use that predictability. When you strategically align the payment schedules of monthly payers, quarterly giants, and high-yield boosters, your entire calendar fills up with cash. Every single week, 4 to 6 payments every month, and I'm about to show you exactly how to build this from scratch. Stick with me because the 12 stocks I'm about to break down could permanently change how you think about investment income. Let's start with the foundation, the monthly payers. These are the stocks that form the absolute backbone of your weekly income machine. Without these, the entire system falls apart. Number 1, Realty Income, ticker symbol O. They literally call themselves the monthly dividend company, and they have absolutely earned that title. This company owns over 15,500 commercial properties across all 50 U.S. states and 8 countries in Europe. We're talking tenants like Walgreens, 7-Eleven, FedEx, and Dollar General. Massive brands that pay rent every single month, rain or shine, no matter what the economy is doing. Realty Income has declared 666 consecutive monthly dividends and raised its payout 133 times since listing on the NYSE in 1994. Over 30 consecutive years of increases, putting it in the S&P 500 Dividend Aristocrats Club. Right now, it yields around 5.6%. For every $10,000 you invest, you're pulling in roughly $560 a year from this single stock paid to you monthly like a salary. This is not a hype play. This is a cash flow machine. Number 2, Stag Industrial, ticker STAG. STAG owns over 560 industrial buildings spread across 41 states. Think massive distribution centers, light manufacturing facilities, and logistics hubs. The kind of real estate that Amazon, FedEx, and every major shipping company depends on to keep packages moving across the country. STAG has raised its dividend every single year since going public in 2011 and currently yields about 4%. No single tenant represents more than 4% of total rent, and they spread across over 40 geographic markets. When goods move across America, STAG gets paid. And when STAG gets paid, you get paid. Number 3, EPR Properties, ticker EPR. Now this one brings entertainment money to the table. EPR owns experiential real estate like movie theaters, eat and play venues, ski resorts, and tourist attractions. These properties are leased under long-term triple net leases, meaning the tenants cover every single operating cost, including maintenance, property taxes, and building insurance. That structure makes EPR's rental income incredibly steady and predictable. The current yield sits around 6.5%, and they raised their monthly dividend by 3.5% just last year. They're also investing over $200 million this year in new development projects. People always go out, businesses always pay rent, and you collect dividends monthly. Now, most people would stop here. They'd grab 3 monthly payers and call it a day. But that is only half the strategy. Stay with me because the next group of stocks is exactly what transforms decent monthly income into genuine weekly income. Let's talk about the boosters. These are the high-yield monthly payers that supercharge your income and fill every gap on your calendar. Number 4, AGNC Investment, ticker AGNC. This mortgage, REIT, drops fat monthly dividends with a yield over 12%. That is not a typo, 12%. AGNC has been paying monthly dividends consistently for over 17 years, distributing 12 cents per share every single month like clockwork. Now, it is more volatile than your standard blue chip because it's directly tied to mortgage-backed securities and interest rate movements. But that's precisely why it pays so much more. For every $10,000 you invest in AGNC, you're pulling in over $1,200 a year in dividends alone. Stack this alongside your other monthly payers, and suddenly your entire month overflows with cash hitting your brokerage account on completely different dates. Number 5, Prospect Capital, ticker PSEC. Another monthly payer with a massive yield hovering around 20%. This is a business development company that lends to and invests in middle-market companies across America. It has been paying dividends for over 17 years straight, currently distributing 45 cents per share into investors' pockets every single month. Is it riskier than your blue chips? Absolutely. The higher the yield, the higher the risk. But when you pair PSEC with AGNC and your other monthly stocks, the combined effect is incredibly powerful. You are literally filling every single week of the month with dividend income. Think of these boosters as turbochargers strapped onto your cash flow engine. But here is where most portfolios completely fall apart. Monthly payers alone will not cover all 52 weeks perfectly. To truly lock down every single week of the year, you need quarterly giants with staggered payment schedules so their payouts never overlap. This is where the legendary blue chip big dogs enter the picture. Number 6, Coca-Cola, ticker KO. Warren Buffett's all-time favorite dividend stock for good reason. 64 consecutive years of dividend increases. Let that sink in. 64 years without missing a single raise through recessions, pandemics, and financial crises. It yields about 2.9%, and its ex-dividend date typically falls early in the quarter. That locks down one specific week on your payment calendar that your monthly stocks might miss. Number 7, Johnson & Johnson, ticker JNJ. This healthcare titan has been raising its dividend for over 60 consecutive years. It yields around 3% with a quarterly payout of $1.30 per share. J&J's payment schedule usually hits right in the middle of the quarter, filling another gap in your weekly calendar perfectly. This company makes products that billions of people use every single day, from Band-Aids to Tylenol to cutting-edge surgical equipment. Healthcare spending does not slow down in a recession. Number 8, McDonald's, ticker MCD. 49 consecutive years of dividend increases. It yields about 2.3%, paying $7.08 per share annually. Its payout tends to land later in the quarter than Coca-Cola or Johnson & Johnson. That gives you yet another week covered. Every time someone pulls into a drive-thru anywhere in America, a tiny fraction of that transaction flows right back to you. Number 9, PepsiCo, ticker PEP. 54 consecutive years of dividend increases. $5.69 per share annually. A yield of about 3.5%. And here is the beautiful part. Pepsi's payment dates do not clash with Coca-Cola's or McDonald's. That means you're stacking another layer of cash flow into a completely different week. PepsiCo owns Frito-Lay, Gatorade, Quaker Oats, and dozens of other household names. This company prints money from snacks and beverages worldwide. Now let's add the special ones, the stocks that give your weekly system an unfair advantage. Number 10, Main Street Capital, ticker MAIN. This one is an absolute dream for income investors. Main Street pays monthly dividends and throws in special bonus dividends multiple times per year. In 2025 alone, Main Street paid out over $4.23 per share in total dividends. It yields around 5.3% with a healthy 50% payout ratio, meaning the company retains half its earnings to fuel growth while rewarding shareholders generously. Those surprise bonus dividends fill random weeks you would normally get nothing. Number 11, for rock-solid stability, add a top dividend ETF. Either Vanguard High Dividend Yield Ticker, VYM, or Schwab US Dividend Equity Ticker, SCHD. These ETFs hold hundreds of the best dividend-paying companies in America inside a single investment. VYM yields around 2.5%. SCHD yields about 3.8% and has delivered annualized returns over 11% across the past decade. Both charge just 0.06% in annual fees. They pay quarterly and provide massive diversification. So even if one stock cuts its dividend, your weekly system stays intact. This is your insurance policy. Number 12, Pembina Pipeline, ticker PBA. This dependable energy company transports oil, natural gas, and other critical resources across North America. It yields around 5% and has been growing its dividend for over a decade. Energy infrastructure is the backbone of modern civilization. This stock fills any remaining empty weeks, making your system airtight from week 1 to week 52. Now pay attention because this is the moment everything clicks. When these 12 stocks combine, the effect is extraordinary. Realty Income pays 1 week, Stag hits another, EPR covers a different week entirely. AG&C and Prospect Capital drop monthly payouts on different dates. Then Coca-Cola, Johnson & Johnson, McDonald's, and PepsiCo strategically fill the quarterly gaps with their perfectly staggered schedules. Main Street Capital adds surprise bonus payments in unexpected weeks. Your ETF provides stability. And Pembina seals every remaining hole. Line all 12 up on a payment calendar, and your portfolio transforms from occasional income into a fully optimized weekly cash flow system that pays you 52 weeks a year. And here is what blows most people's minds. You do not need a fortune to start. If you invest $10,000 into each of these 12 stocks, that is $120,000 total. Based on a combined yield of roughly 5 to 6%, you're looking at $6,000 to $7,200 a year in total dividends. That breaks down to about $115 to $138 every single week, enough to cover your weekly grocery bill, fill up your gas tank, or chip away at a car payment, and you did not work a single extra hour for any of it. But here is where the real magic kicks in, and this is the part that separates wealthy investors from everyone else. If you turn on dividend reinvestment, also known as a DRIP, every single dividend payment automatically buys you more shares of that same stock. More shares generates bigger dividends the following month. Bigger dividends then buy even more shares, and those new shares generate their own dividends. This compounding cycle quietly accelerates your income growth year after year without you lifting a single finger. Many brokerages offer drip enrollment completely free with zero commissions, and some even allow fractional share purchases, so literally every penny of every dividend gets reinvested immediately. In 5 years, your weekly payments could realistically double. In 10 years, they could triple or even quadruple. That is not fantasy. That is mathematics working relentlessly in your favor. Let me leave you with one final truth. Most investors don't have an income problem. They have a structure problem. They buy random stocks, wait forever, and wonder why their money isn't growing. But when you build with intention, when you choose companies that actually pay, when you spread payment dates across every single week, that is when you unlock real financial momentum. Weekly dividend income is not a dream. It is discipline. It is strategy. Once you set this system up, something shifts. You stop stressing about crashes. You stop chasing meme stocks and TikTok hype. Your money shows up every single week. Steady, predictable, consistent, cash flow that doesn't depend on your boss, your job, or the economy. Cash flow that builds itself. So here is what I need you to do right now. If this video opened your eyes to a completely new way of thinking about dividends and building real weekly income, smash that like button so the algorithm pushes this to more people who need to see it. Drop a comment below and tell me which of these 12 stocks you are adding to your portfolio first. I genuinely want to know your top pick. Share this video with a friend or family member who is tired of waiting 3 months for a lousy dividend check. And if you haven't already, hit that subscribe button and tap the notification bell so you never miss another wealth-building breakdown like this one. Your money should work as hard as you do every single week of the year. Now you know exactly how to make that happen. I will see you in the next one.